Good morning, everybody. Welcome to Talking Money with Kgauza on your favorite podcast platform, Your Media. It's a great, wonderful, chilly but bright and sunny Friday afternoon, Friday morning rather in Johannesburg. It's 10 o'clock right now, just after 10. And this is one of our first earlier episodes as we starting this beautiful journey of being on this platform, getting us talking, getting us engaged, talking about life, the beautiful things in life, talking about money, how it helps our lives, how it has crippled our lives, how it can make us better, and positioning ourselves to best take it on, take on the opportunities that life gives us, make sure that we get all the rewards and we advance in life as best as we can, which is what our entire platform is about, empowering ourselves, giving ourselves knowledge, and putting ourselves in the strongest position to make the most of life. Today, we're going to have a pretty short conversation. It's one, hopefully, in a lead-up series of conversations around understanding and optimizing the opportunities that flow from engaging in debt, in raising money, to improve your life, to make things easier, and to advance yourself. We'll do so in time with different guests. We'll invite people into the studio and have all manner of interesting conversations about engaging with credit, because in many people's instance, there's a negative impact for some people when it comes to how we engage credit and how it impacts us in the long term. Now, the idea is to help us be empowered, knowledgeable, so that we can get as best out of the deals that we engage in as possible. We will introduce our guest in a minute or two. He's unfortunately not physically present in the studio, so you'll pick up his voice. He's on the line. He is from the National Credit Regulator, and he'll tell us a little bit more about his role there and what the NCR means and what they do for the South African public. I, however, do think I just want to start here that we're coming through quite a interesting period over the last 18 months or so, since the advent of lockdown and the whole COVID pandemic. It is actually something that clearly is going to shape how we are and how we work and how we run businesses and run our lives for the foreseeable future. A lot of things are going to change, fundamental things, structural things. We all see the radical change in the workplace and things like that. But it's also had a very huge emotional toll. And I think it has to be recognized that, we've lost relatives. I've sadly lost my aunt, the youngest of my mother's sisters. May she rest in peace, as should everybody else. We've lost iconic people. We've lost serious cultural icons like Sepotsula, Steve Kekana, and business icons, leaders. We've lost friends, we've lost relatives, I've lost bundles of neighbors. I've lost a father to one of my best friends, Mr. Makhanedisa. It's been tough. It's been a very difficult 18 months, and the last few weeks have been fire. I mean, since the middle of June coming through to where we are, I've really never seen or experienced anything like this. But all of it points to an opportunity as well. They say in one of the Chinese languages, Chinese sign language, there's a symbol they use for opportunity is the same as the one they use for crisis. So effectively, this gives us an opportunity. This crisis that we're going through gives us an opportunity to restart, to switch on the start button again and reset ourselves. And these conversations, particularly today's conversation, is really about that. We see this as an opportunity to rethink about everything that we have, where we are, and look at how we can go into the next phase of life on this new changed environment with a better, more empowered understanding. Similarly, today's topic is also for about a fresh start. That life still goes on. So the other day, Miss Universe, former Miss South Africa, and recently past Miss Universe, graduating at VET. So people still come through school, still complete their studies, still get into the workplace. I've been sitting with my niece. She's now a teacher, and she's 6 months, 7 months in the job. So there are people who are restarting life as life goes on in this odd, unusual space. I mean, even UCT is opening up an online school. So life is possible. All manner of things are changing. Rules are being rewritten and so on. But I'd like us to take this opportunity, and that's what today's episode is going to be about. We're just going to look at the things one has to be mindful about when you're engaging, particularly credit. I found that one of the things that cripple most long-term financial outcomes is a poor engagement of credit. We often take on debt that we don't understand. We take on products like a credit card. I think I had a credit card after 2 paychecks. I did it because I thought I needed it to rent a car, but it became a long-term crippling debt for me because it took me forever to get out of that debt. There are other things that we do, especially in the early stages of our life, that if not done properly or corrected early or engaged properly right at the beginning, could have a long-term crippling effect on our ultimate outcomes. Eventually, when we hit our 50s, 60s, and so on. And it's hopefully things that we can speak about now, try to change now for those who are coming in for the first time, be mindful of. Many people aren't aware of some of the opportunities and some of the pitfalls. Some of us are already in it, and the battle is getting out of it. So hopefully this conversation and sense of renewal and sense of restart presents a chance to rethink about some of these things. Now, I've invited our guest. He's from the National Credit Regulator. His name is Mr. Alfred Matsimbi. He's on the line. Good morning, Alfred.
Good morning, Kgauza. Good morning to the listeners. I'm very grateful for the opportunity that you are giving us today to interact with our listeners and to really share some ideas. And indeed, as you mentioned, we are going through a very, very stormy weather.
Yeah.
It is crippling. It is affecting many people, of course.
Yeah.
But we shall overcome, as you have put it.
Thank you, my brother. Yeah, life does go on. Look, we know we've got limited time with you. We were anyway going to have a tidy, shortish episode today. So I'll just get straight into it. As we do, could I just ask you, number one, to give us a sense of a very broad, high-level sense of what the National Credit Regulator is as an organization and an entity, plus what you and your division do inside the National Credit Regulator.
Okay. Thank you very much for the opportunity once again. The National Credit Regulator, well known as the NCR, is a government entity. It regulates the credit industry as a whole. The NCR was established in June 2006 in accordance with the National Credit Act, which is Act number 34 of 2005. The main role of the NCR, as I put it, is just to regulate the credit industry. And how do we regulate the credit industry? The NCR register industry participants. By industry participants, we're talking about credit providers, credit bureaus, debt counselors, payment distribution agents, and alternative dispute resolution companies. And after we have registered them, we monitor their conduct within the credit industry, mainly to ensure that the rights of consumers are protected. Now, we also educate and create awareness of the protection offered by the National Credit Act. So the department that I belong to is Education and Communications Department, and I'm an Education and Communications Officer at the National Credit Regulator. So we educate, we create awareness of the protection offered by the National Credit Act. The other role of the NCR is to research the credit market, looking at that trends, what is happening within the credit industry. Then we advise the government on policy and legislation development. What is also critically important, Kgauza, is to mention to the listeners that the NCR receive and investigate complaints to ensure that the rights of consumers are protected. After we have investigated their complaints, we may act and enforce the act. We enforce the act and take action against contravening institutions. For example, if consumers are not fairly treated, we then take the matter to the National Consumer Tribunal Court. You will understand, Kgauza, that we are living in a constitutional democracy. So our consumers do have rights, but the rights are married to responsibilities. So that is where we come in as the Education and Communication Department. That as we educate consumers about their rights, we also remind them that they must act in a responsible manner.
Yeah.
You just mentioned, you said when immediately after getting a job, after getting 2 paychecks, you had to take a credit card.
Yeah.
So these are some of the temptations that many of us face, especially young people.
Yeah.
You are enticed to take credit, and then you forget that credit, as much as you have rights to buy on credit, you have responsibility to ensure that you service that particular credit card, whether it's a credit in a form of buying a car, clothes, or you take a developmental credit, a student loan, or you improve a low-cost house, or you even set up a small to medium-sized business, which, of course, this is a very important type of credit, developmental credit, especially if you set up a small to medium-sized business. Look, the pandemic has crippled our economy so badly that we need entrepreneurs. So unlike taking a clothing card, taking credit to start a small to medium-sized business, you will be playing a very, very significant role in the economy of our country.
Yeah. So actually,
we need to encourage.
That point that you're raising there, let's maybe start there. Somebody, when I told one of my friends that one of the first subjects I want to talk about was credit, he said, don't come in from a negative angle. Try your best to show the positive and potentially developmental side of using credit. And I'm happy that you went there, because that in a sense is the mindset that I think could help many of us. If we come in with a developmental growth mindset to raising credit as opposed to a consumption mindset. And sometimes I feel that, as I pointed out in my own case, I really just took debt so that I can, as it were, buy stuff. It was just for consumption's sake. And in the moment, you have this conundrum that you can afford, and therefore you take on the debt. You can afford to repay it, while in fact you're hamstringing yourself from actually investing in actual growth. But let's talk about that. I mean, what are the things, the positive side of credit? How does it help you, as it were, get ahead in life?
Okay, very important question, Kgauza. You see, I must just mention to the listeners that, credit and our finances in general, credit included, play a significant role in our well-being. My health, your health can be impacted by how you manage or how you handle your finances. Through credit, you can have many, many assets and liabilities as well. As you put it, you are able to afford to drive a car because of credit. Through credit, you can have a house. And there are many people who went to buy clothes as the season changed. So we have clothes, houses, vehicles, because of credit. So all these things, we can classify them either as assets or as liabilities. Now, the truth is, credit does not come cheap. It is very, very easy to get credit when you are employed. But immediately after that, tables may turn. Because you can end up being over indebted.
Yeah.
And once you are over indebted, hell break loose. Because over indebtedness can negatively affect many other areas of your life.
Let's just slow it
Your
down.
development.
Yeah, let's just slow it down there. So we have this newly graduated individual who's been fortunate enough to get a position. I cited my niece earlier. She started a job in late last year. She's a teacher now. She'll soon be permanent and things like that. But nonetheless, that type of individual, they've got a permanent job. They are starting out. What kind of things should they be mindful of before engaging any credit? Because in her case and one of her colleagues, the questions were, what should I do now? Where should I start? What are the key aspects that you would advise somebody to keep in mind to ready themselves to access opportunities that might come with credit and loans? What should they be thinking about?
Okay. One, guard against over indebtedness. Because when the creditors open up their arms and say, we welcome you, here is a credit card, here is a starter pack vehicle, it's very important that you avoid over indebtedness. That's number one. Because you see, over indebtedness can mess you up.
Yeah.
Your over indebtedness can affect your development. Over indebtedness can affect future career and employment opportunities. Over indebtedness can even affect your relationships, your marriage, and even your health. Yeah. So number one is to guard against over indebtedness.
Yeah.
And maybe the listener is saying, what is over indebtedness?
Yeah.
A person is over indebted if the money that he is receiving can no longer be enough to service all the other responsibilities, financial obligations that you still have.
Yeah.
So you are over indebted when you can no longer pay all the financial obligations on time as agreed in the credit agreement that you have signed. So how do we find ourselves in a situation where we can no longer afford to pay? We may have failed to work out a budget.
Yeah.
We may have failed to deny ourselves and to even calculate or distinguish between a need and a want.
Yeah.
So what is a need? A need is something that you cannot survive without.
Yeah.
And a want, it's just those little luxuries that you can survive without.
Yeah.
So many a times when we buy on credit, we should avoid servicing our wants at the expense of our needs.
Yeah.
If there's something that you can postpone because you don't have cash, but you have your credit card, but if there is something that you can postpone that purchase.
Yeah.
Until you are sure you really, really have worked out a budget. Yeah. Because many people are approved. You go to store A, they approve you for a purchase. You go to store B, you are approved. At the end of the day, what you have is not sufficient to service all your financial obligations.
Can I?
You are over indebted.
Yeah, just to add a little bit more to that as well, because I sense that oftentimes it is easy, and we are not completely mindful from a long-term point of view. We really are thinking, I can afford to pay this debt now, and I'll take it on, but we don't actually make the full-on calculation that over 20 or 30 years, it could actually cripple me. And it's maybe that mindset that we need people to have a lot more of now, about how in the long run, this could actually work against me than help me.
Yes.
Yeah.
Yes.
I just also wanted to raise something about the early stages of starting work, and, appreciate some people are a little bit deeper in life in that regard. But we know our socioeconomic position. Some people are the first to get a a proper salary job in their families, or even if they are not the first, but their living conditions are abject. They don't have a bed, they don't have a fridge. Even if you buy groceries, you don't have anywhere to store them. So they have to start a little bit further down than where some people have to. And as a result, they sometimes have what I could call legitimate reasons to raise credit. Yeah. So you qualify for a car at work, but you don't have a garage at home. So you first have to put up a fence and put up a parking area and things like that. Those people have found themselves easily seduced into taking up loans. And now this is where you went earlier, and like us to go too quickly. The cost of debt. People need cash, as I've just elaborated, and sometimes very legitimately so, but they don't interrogate the price at which they get it. And that's what I want us to talk about. Can you say something about interest, how it works, how one should approach it, and what understanding should one have about the impact of the interest rate you're charged on your debt, and how one can best manage that situation?
Yes, thank you. So true. Credit does not come cheap. That's where I should start.
Yeah.
And as you mentioned it, there are costs that goes with buying on credit. And if we are not mindful of those costs, we end up being over indebted.
Yeah.
You see, when you apply for credit, the minute your application for credit is approved, the credit provider charge you many charges, including interest.
Yeah.
But number one charge that you are going to pay is the service fee as well. But also, the minute your application for credit is approved, then the credit provider charge you besides the interest rate. Then you'll also pay what do you call this? You pay a service fee. You also pay administration fee. Then you continue to pay a credit life insurance, where if you have accepted it.
Yeah.
But so unfortunately, people tend to think that when you apply for credit, you'll be charged interest.
Yeah.
And that's not true.
Yeah.
Once your application is approved, they hit you with initiation fee.
Yeah.
Then you'll be paying interest depending on the type of credit that you are going to pay.
Yeah, but interest
fee, as long as the credit agreement is active, you will be paying a monthly service fee until to the end.
Yeah. But now about the interest, what's a sensible price? I get that question a lot. People like, is 15% fair? Is it right? How should one understand the rate, and can one bargain or pull it in one direction or the other?
Okay. Look, interest will vary from one type of credit to the other. All right?
Yeah.
So the minute you apply for credit, and let's take, for example, just a short-term transaction.
Yeah.
Where you are just buying, you just take a loan. That loan, once it's approved, your interest will be, because of a short-term transaction, they will charge you a 5% interest. That's interest. We're not talking about the initiation fee that you may have paid and also the insurance. Yeah. It's a 5% for a short-term transaction. When we're talking about short-term transaction, we're talking about an amount around 5,000 to 8,000 rand, where you are willing to repay within a short period of time, let's say in not more than 6 months.
Yeah.
Then the credit provider will have to charge you an amount of 5% on the interest.
Yeah.
So I'm just giving a short-term transaction.
Yeah.
But when it comes to other types of credit, maybe a vehicle or or a furniture, then it will depend on one, your credit profile.
Yeah.
And then also the fact that you are a reliable a consumer,
Yeah.
the credit provider can charge you on, the credit provider can bank on you to say, you are a reliable consumer. We can see that you do have a job, and then you will be able to service your debt.
Yeah.
So then that type of interest will vary.
Yeah.
It will vary from one consumer to the other.
Yeah.
Why does it vary?
Yes.
It varies because how you have conducted yourself previously determines whether you are a high risk or a low risk. So I gave an example of a short-term transaction where you pay 5%.
Yeah.
But if it's another type of credit, such as mortgage bond, then you will be charged depending on the repo rate.
Yeah.
The repo rate at present is at 3.50.
Yeah.
So it's going to be a repo rate plus 12%.
Yeah.
You remember previously repo rate was a bit higher. It was around 7%.
Yeah.
Then the interest rate for a mortgage bond will be not more than 19% if it was repo rate at 7%. At 7%.
Yeah.
But at present, because repo rate is at 3.50, it's gonna be 3.50 plus 12%.
Let's talk about the 12% quickly. So if the repo rate, my understanding of it is that it's the interest rate that the Reserve Bank charges the commercial banks for the money that it loans to them, right? Now, the banks then add what you're suggesting would be around 12%.
For a mortgage.
For a mortgage, for example.
Yes.
My question, and this kind of goes to the other thing I wanted us to talk about just now, the credit profile. My question then is, shouldn't your good standing, your credit profile, if it is of a good quality, enable you to negotiate it down to much lesser than the 12%? So maybe you'll get them to charge you a 10 or a 9 or whatever on top of the repo rate.
Yes. Absolutely. Remember I said, the minute you are approved, you get approved specifically because your credit profile looks good.
Yeah.
And you have proved beyond reasonable doubt that you are able to service your debt.
Yeah.
Then you are able to even negotiate.
Yes. So let's talk.
Not everybody will be charged around 16%.
Yeah.
Not everybody will be charged that. It will depend on how you have conducted yourself previously. If you were servicing your debts on time, then the credit provider can see clearly that you can be a trustworthy person. You will service your debt, and then therefore you are able to. The minute they say for a vehicle, for example, they say your interest rate will be 15%.
Yeah.
You are able to say, please, man, can you be kind enough and reduce?
Yeah.
Because if you accept, just because your application for credit is approved, you immediately sign.
Yes.
Then you won't be able to negotiate for that.
That for me right there is the key lesson, right? And thanks for that point, because in effect, what we all really need to be mindful of is the fact that we might have rights, like you said up front. We live in a constitutional democracy, but we also have responsibilities. And some of those responsibilities are to ourselves. So when you're offered a loan, you have a responsibility to make sure that you take it at the best price possible for yourself. And if the criteria is your credit position, you have a responsibility to make sure that you say, my credit profile is good. I shouldn't be paying so much interest. Can we cut it down to X because I think I'm a man of good standing? Just as we wrap up, because like you mentioned, you've got some commitments, and I really appreciate the time you spent with us. I know actually we will be doing some more chats with you over time, particularly insofar as the work you do at the NCR and some elements, because we will have extensive conversations in time about further phases around debt, interest, debt products, whether it be the credit card, the home loan, how do they work, how to best manage them, how to best settle them, and things like that. Those conversations will come. We'll talk about getting out of debt. We'll talk about debt consolidation or things like debt review and things like that. Those will come down the line, and we'll have many engagements about that. But just for now, as we wrap up, can you just, from your vantage point, give a couple of tips, because we want everybody to win. These things are there. There are credit products that, if used well, could make your life easy, could improve your life immensely. But where should you be? What are the key 4 or 5 things that one must always do? You've mentioned the budget earlier. We now spoke about your credit profile. Maybe a little bit, say something maybe about having a good credit profile, and maybe encourage people as well about negotiating the best possible price when they do take on debt.
Mm-hmm. No, it's true. I appreciate. Because of time, let's look at the tips that we have as the NCR is to all the consumers, young people included, is that once you have signed on the dotted line and you have accepted a credit agreement, don't ignore your debt.
Yeah.
What I mean is that you need to know how much is coming into your pocket and how much is going out, and make a list of all the creditors that you are servicing, and then get a copy of your credit bureau record.
Yeah.
The credit bureau record or report is for free.
Yeah.
And get in touch with your creditors. Yeah. If you are battling, get in touch with your creditors and explain your situation.
Yeah.
So it's very important that we must not ignore our debts.
Yes.
And also we need to prioritize them by paying our essential expenses. Maybe your electricity, your rent, insurance. The minute you get your salary, pay your essential expenses, and also pay your accounts on time.
Yeah.
Many people tend to skip payments. You pay creditor A this month, next month so pay your creditors on time and pay what is expected of you. Seek expert advice before, if you are not coping with your debts, whether it's your debts or even you intend selling because you are no longer coping. Seek expert advice. Very, very important. We must avoid to borrow to pay off other debts. So, credit creates more debt. So don't borrow more to pay existing.
Yeah.
And also, we have to avoid buying food on credit, especially those who are earning a salary. Avoid buying food on credit. Prioritize your food, your grocery. And if possible, we have to try and cut down on our expenses. How do we cut down our expenses? We make a list of our wants and also our needs. Then we focus on the needs. And we service those debts.
Yeah.
If possible, review your insurance policies from time to time. Use an independent financial advisor when you are reviewing your insurances. And when we cut down our expenses, there can come a time where we have to reduce our entertainment.
Yes.
Our consumption of alcohol, consumption of tobacco and cigarettes, our entertainment, the club membership, traveling, phone calls, holiday clubs. We have to cut down all those expenses. It will help us to cope, especially in these trying times.
When you say, go ahead.
Unfortunately, because of the pandemic, many people have lost their jobs.
Yes.
And you see, there are debt relief measures. Maybe in the near future, we'll talk about those debt relief measures.
That would be great, yes.
Such as credit life insurance, debt counseling, and also the surrendering of goods.
Yeah.
The National Credit Act allows consumers who are no longer coping with their repayments to approach the credit provider and give a written notice to say, look, I bought a car and I'm no longer coping. I wish I can just return the goods. And then the credit provider must then evaluate and give you a fair price on that particular goods that you bought.
Okay.
So it will then be sold either on public auction, and your account can be settled.
Yeah.
And the advantage about settling your account is that it won't prevent you from being excluded. It won't prevent you from getting employed in the near future, especially if you have lost a job.
Yeah.
Once you are negatively listed at a credit bureau, there can be employment exclusion.
Yeah.
You can suffer employment exclusion because you are negatively listed, and you get an employment opportunity where you'll be handling finances, budgeting, cash.
Yeah.
So once they find that you are negatively listed, they won't employ you.
Yeah.
So to surrender that car, and the car is sold on public auction and your account is settled, will help a lot.
Yeah.
But unfortunately, when you surrender the car, it may happen that it is sold at a lower price. And if it is sold at a lower price, you will be liable for outstanding balances.
Yeah. Yeah.
So this has to be done in writing.
Yeah.
Lastly, very important, we must not wait until goods are repossessed. Once repossession takes this form, number one, there'll be a 90 days default. Then a credit provider will then issue out a Section 129 notice, which is a letter of demand. Then summons are issued. There will be court appearance, and default judgment will be passed. Then repossession happens. Once they have repossessed, as I indicated with the surrender of goods, you may be liable for outstanding balances. But if the goods were sold you surrendered, and they are sold at a higher price, the proceed will go back to your pocket because your account will be closed, and then what is left will then be put into your account. So it's very important that we save money. And how do we save? We put aside some money for unforeseen circumstances or situations.
Of course.
And we have to be consistent.
Yeah.
We save every month, no matter how small the amount is.
True.
This will assist you as a consumer when things change. Like right now, we are facing the pandemic. Many people have lost their jobs. You can make use of the money that you have saved to cope for 3 to 6 months until you get re-employed again.
Of course, yeah. Okay. No, thanks. Thanks for all the valuable information. It's really sparked a lot in my thinking for sure. And it is a call to action. We're looking forward to having many more such engagements that will hopefully empower and help our listeners and the subscribers on the platform to think more deeply and be more reflective about things that flow from taking on credit products, how to use them best, and things like that. But Mr. Alfred, thanks a lot, my brother, for the time and for the insights and for your generosity. Looking forward to engaging some more in the coming future.
Thank you very much, Kgauza, and the listeners. Have a blessed day ahead.
Okay,
Bye-bye.
Thanks, Baba. Okay. Thanks to Brother Alfred. Look, I'm going to wrap it up on my side for now. Thanks to everybody who's taken the time to watch the episode and engage with us. In the coming weeks, we'll have even more exciting conversations, very rooted in the South African context, in our backgrounds, and so on. Forthcoming subjects will include discussing things like the BEE opportunities that are available, that have come about. I'm talking here mainly of the public share offerings that people have participated in. We'll soon have, hopefully, some kind of a panel discussion engaging about those things that we've had and how successful or not they have been. There's a lot more to talk about investments, about savings. There's a lot more to talk about new kind of products, new kind of thinking, tools, applications, platforms where you could invest and grow your money and grow yourself. Those conversations are in the pipeline. We're busy cooking them, and they'll come through in future episodes. Just to wrap up from our discussion today, I think for me, what's most key and the thing to guide and engage and encourage many people to think about is that there is value in readying yourself for credit. We don't often get really ready to take it on before we do. And here's the challenge with credit. If not approached sensibly, it has a very long-term lingering effect, to the point where people work for 30 or 35 years, and when they now have to take everything that they've built up over life and stop working and look after themselves at a time when they don't have the ability to make money, a chunk of that money goes to settling debts from time past. So effectively, money that you've saved up over time to look after you when you can't work and make money is used to settle things for lifestyle and things that have come to pass. So it is more sensible for all of us to do our best to take credit where we need to. And like I said earlier on, sometimes there is a real genuine need that requires you to do so. But if we do, we should do so sensibly. We should get it at the best price that we can. And that price comes from having a good credit standing and an ability to negotiate. Just because Bank One gives you a quote and say, we'll give you a credit card, 15% interest rate, doesn't mean you can't go to Bank Two with that proposal from Bank One and say, look, they are offering me this product at 15%. Can you do the same thing at 12 or 10 or whatever price there is? Nothing stops you from pitching one bank against the other so that you get the best deal possible for yourself. We've got to have that mindset, and that mindset starts by caring for our credit standing right up front, have a good record, and on the back of the record, build up a good credit standing by how you service your debt going forward. And if you do so perfectly or properly, you give yourself a chance of settling your debt early, settling your debt cheaply. This in turn enables you to have more money to do other things, to have more money to save, to have more money to invest, and basically realize your aspirations and dreams as you progress in life. So, there's more coming, there's more that we're cooking, and hopefully we'll get empowered and we'll learn some more. But I'm checking out. Thanks to everybody, and looking forward to chatting to you again soon. In time, we'll be doing this live. There's a SMS line, there's a WhatsApp line, there's a ability to engage, but that'll come in time. For now, thanks a lot for everybody for tuning in. Cheers.